But you talked about crypto markets, and that is kind of a fad right now because many people want to get into crypto and trying to leave the Indian markets of sorts. There is a lot more transitioning going on from the Indian markets to the crypto and forex and US markets. So even the presidents of countries, so United States presidents Donald Trump himself has introduced a new coin, Trump coin. So if he's also investing in cryptos. So what do you think about these crypto markets? I just wanted to get your general opinion on them.
Uh, I would tell you what I believe about it. But before that, I think it is very important for us to set the context over here.
Okay.
Uh, a I'm not sure if many people understand what is blockchain, what is cryptography, and what is cryptocurrency. So,
Correct.
A, I think it makes sense that we talk about that.
Okay.
And B, I'm not sure if you're able to relate to it, but we need to understand the evolution of money, like right from barter till today. Once we understand that, I think the audience by themselves will be in the position to decide about what could happen in future. Nonetheless, I will share my opinion about cryptocurrency.
Okay.
But first, let me tell you what is blockchain,
Okay.
because imagine a world, or let's say imagine a classroom where a teacher is taking attendance of
Yeah.
students. Now that's just a world. Now think of it as a parallel universe or a multiverse, whatever.
Okay.
That's just a world, okay?
Done.
And the traditional approach is that the teacher would take the attendance on his or her own attendance sheet. But
Yes.
then there's a problem. What if the sheet gets lost? The data gets lost. Another
Correct.
problem is, what if somehow the attendance sheet gets tampered with? There is no way to figure it out, because all the records of the attendance are at one location, centralized.
Correct.
But then there is a solution to this problem. Imagine if all the students have the attendance records of all the students.
Okay.
Like one student has the attendance record of, let's say, the remaining 60 students. The
Okay.
second also has an attendance record of all the students. And now
Yes.
when the teacher calls out the roll number, everyone is marking whether roll number 1 is present or not.
Okay.
The beauty about this structure is, let's say if roll number 10 is absent, but there is one person, maybe a best friend, has marked that person present. But the point is, that record will not match with any other record, and I will
Correct.
immediately come to know that there is a there's something which is tampered with this record. Second
Correct.
of all, there is no risk of the record getting lost. So here, this structure is addressing two problems. One is the records getting lost and records getting tampered. This is exactly how the blockchain works.
Got it.
Blockchain also has its own network. Think of it as a parallel world. Don't think of it as part of Earth. It will be a little easier for you to understand that it's a different world altogether, where it
Yeah.
has its own network. And who are these networks? One computer is connected with another. So if you want to enter this particular network, you have to, you have to be separately opening a cryptocurrency wallet. We'll talk about that later. My point is, here when the transaction is happening,
Yeah.
the network which is on a particular what do you say programmed platform, uh,
Okay.
it automatically generates a code which is called a hash code, and that
Yes.
hash code is very unique to every transaction which has been done.
Correct.
And the beauty about this is, this transaction which is generated is present on all the computers which are part of the network. These are called nodes.
Yes. Okay.
Are you able to relate with that attendance
Yes.
example?
Yes. Yes. That was a
Yeah.
beautiful example. Very clear
So
to understand.
so the thing is that if I have to change or temper the record,
Yeah.
my computer need to be faster than all the computers in the network, which is impossible. So
Correct.
I can, theoretically you can say that it is possible, but practically it is impossible. So I would say nearly impossible.
Got
But the
it.
question is, how does this record gets on each and every computer or the nodes within the network? When the hash is generated, consider hash as the end of the puzzle. All
Okay.
these computers by themselves independently have to run a certain amount of computation and come up with that hash by themselves. If and when one particular computer or a node comes up with a hash which matches the hash of the code,
Yeah.
the generated hash of the transaction, that's when we say that the transaction is verified, and only
Okay.
then this transaction will reside on every record on every computer.
Got it.
So now here's the thing. Later, let's say this transaction was about me giving the money to you.
Yeah.
So every record, every computer in the system network has the record that this asset belongs to Arnav.
Got it.
Now, but before that, it belonged to me. So there was a hash which was assigned to me, and then there's a hash which is assigned to you, and these both hash are connected to each other.
Okay.
So this transaction where you are the owner, and the transaction before that where I was the owner, these both are two different blocks, and each block is connected to each other, and that's why it's called blockchain.
Yes.
Getting it? And
Yes.
these blocks are generated with a hash, and the hash has to be. Now here's the thing: what's the advantage of these nodes or the computers? Who are these people? They are basically miners. These are called
Yeah.
individuals who try to come up with these codes and try to verify the transaction. The
Got
advantage
it.
to them is, in return, they earn something, and that is
Yeah.
called cryptocurrency. And why is it
Yes.
called cryptocurrency? Because this entire technology and the platform on which this is based on cryptography. And when you
Okay.
earn the currency out of this, that's why it's called cryptocurrency.
Got it.
Now here's the thing about cryptocurrencies.
Yeah.
Especially I would talk about Bitcoin because it has 50% of the market share in the cryptocurrency world.
Okay.
Bitcoin, there are only 21 million Bitcoin in circulation. That's it.
Okay.
Forever. It is never going to increase, neither decrease. It's just going to be 21 million cryptocurrencies. That's it.
Okay.
Now, you realize that because of this entire structure, the record is always there. It's very transparent. B, it cannot be tampered with. C, you can't even reverse it. So
Correct.
anybody who's trying to do something about the record, about this particular record, it is immutable. You can't do anything about it. It stays
Got
there
it.
forever. Okay.
Yeah.
By when I say about this, let me give one more analogy.
Okay.
Think of it that you are sitting with 10 friends in a group, and there's a 500 rupee note. What you have to do? Just play one game.
Okay.
Everyone has to sign, put a signature, put their own signature on that currency note, give it
Yeah.
to another, put the signature on that currency note, give it to another. The beauty
Okay.
about this approach is, can I say the person who last did the signature is the owner of that note, is the
Okay.
one who possessed the note?
Yeah.
But guess what? I can go backward and I can figure it out who were the earlier owners.
No, correct.
And that's exactly what the blockchain is.
Okay.
Getting it? So,
Yes.
A, everyone has the record, so it's transparent. B, it cannot be, what do you say, tampered with.
Okay.
So these are the advantages which the blockchain gives. And C, it is scarce. 21 million Bitcoin only, not
Yes.
more than that. You can't print because I don't know. I'll talk about it, but
Yeah.
these days the government, they print as much as they want. But coming to
Correct.
that, how did even cryptocurrency, how did we arrive here? Let's
Correct.
go to the barter system. Let's go way back in time. Barter system. Let's say you wanted a sheep and I wanted cow.
Yeah.
So then we would trade cow versus sheep. And then for
Yes.
somehow we would still agree that okay, one cow is equal to three sheep. Let's say
Okay.
for example.
Okay.
But what about a situation? I'm just giving you how did the evolution of money.
Okay.
Uh, let's say what about the situation where you wanted three sheep but I did not want cow, or let's say for example I wanted cow but you did not want three sheep.
Yeah.
Can I say in that case the transaction would not happen? By the way, you don't realize the problem with the barter was only those people could transact who had cows and sheep. So
Correct.
that way you have less people interacting about it.
Yes.
And let's say for example you just I just need two sheep. Does it mean that you'll give me half a cow? That's not happening, right? So
Yeah.
because of this, then people progressed to another system where people would collect stones, shells, feathers, and these were used as sort of, I would say, currencies, where these things were assigned values. So now if you want just sheep and I don't want cow, you can give
Yeah.
me X number of stones or X number of feathers or X number of shells or beads, and then I would basically trade it with you.
Okay.
But then there was a problem with this also. The problem was lack of scarcity. Anyone could easily come up with their own set of stones.
Yeah.
Anyone would easily come up with their own set of feathers, beads, etc. And
Correct.
because of this, the value of things would kind of fall down
Yes.
because there was a lot of stones, etc., etc., etc. What I don't know if you realize, but I'm in a way connecting this to inflation. But we'll talk about that later once we
Yes.
come to fiat currency, which is today.
Okay.
But because of lack of scarcity, people realized that the value was kind of going down, and that's when metal coins came in. Not the gold coins, the metal
Yeah.
coins like copper and brass and all. But the problem with these, yes, it did solve a great amount of problem. The scarcity was addressed to a great extent, but they were still very far in. They were abundant in number. Second of all, these coins they would not have uniformity in shapes
Okay.
and size and weight. So, I mean, let's say one coin could have, let's say, a 10-gram weight, but there could
Yeah.
be another single coin could have a 12 grams of weight. How can you say that they are same? But the
Correct.
idea was that, okay, if you give one coin, you get one sheep.
Yeah.
That was the idea. But then there was, inconsistency. And then there was this, what do you say, a regime of an emperor. I think now it's part of Turkey, but Lydia, I think. Yeah. That's when they came up with their own version of gold coin, which were more consistent. But
Okay.
again, the scarcity was a problem, and that's when entered gold coins. And gold coins, A, it was shiny, so it itself could have a value.
Yeah.
B, it was very scarce. So because of
Correct.
this, gold coin as a currency kind of picked up really well.
Okay.
And to add on to it, all the emperors and the rulers of that point in time, they would collect tax through gold coins. So that way it gained more popularity. And for
Okay.
centuries and centuries, this is how people would trade using
Yeah.
gold coins. But then there was one problem with the gold coin. If you have to buy a sheep, or not sheep, I mean, if you have to buy a ship or an
Hmm.
airplane or something which is very expensive, you had to, kind of lift a huge amount of
Amount of
gold coin,
coins. Yeah.
and then you do the transaction. So
Yes.
what someone came up with a brilliant idea was that, you know what, I'm a trustworthy person or an entity. You
Hmm.
keep your gold coins with me. In return, I'll write it on a piece of paper and
Hmm.
say that this is the value of the gold coin. This is the gold coin worth which is with me. And then you can give this paper to someone else. And that is how paper money came in. Now
Correct.
imagine how revolutionary the idea was.
Hmm.
But also imagine if you were in that era, how reluctant would you be to accept it? Because you can see gold coins which are so shiny, which are
Hmm.
which you feel, and there's some amount of heaviness over there. As
Yeah.
against that, you're just getting a paper,
Piece of
and
paper.
that
Yeah.
paper as a piece of paper value. The acceptance took a lot of decades, probably more than a century too.
Okay.
The acceptance of paper money, it took a good amount of time.
Got it.
And then, but nonetheless, paper money, then people started trusting this in this paper.
Yeah.
And up until 1970s,
Hmm.
and thanks to 1944 Bretton Woods Act, which was between USA and most of the countries in the world, where the understanding was that US dollar will be printed, the amount of US dollar printed will be based on the gold reserves the US government has.
Okay.
And in turn, other countries' currency will be packed to US dollar. So indirectly, all the currencies were packed to gold, but it was via US dollar.
Okay.
I'm not getting into the politics, but sometime in 1970s, where America had faced that Vietnam War and they had lost, and there was a huge amount of fiscal deficit, the
Hmm.
government had the requirement of printing the currency. But how would they? They did not have that much gold, so that
Yeah.
they could print the currency, and the currency was required to revive the economy. And that's when President Nixon unilaterally kind of decoupled the dollar with the gold, and now
Okay.
they were printing dollars without the requirement of having any gold in the
Gold.
reserves, and this
Yes.
is called fiat currency. And of
Okay.
course, then there's a plastic card and credit card and all, but it's basically a version of that. So if you
Okay.
talk about UPI payments and fiat currency, no, so now fiat currency, governments can print as much as they want. Of course,
Yes.
they don't print like a crazy amount of money, because then there's something called inflation. Because if there is a lot of money in the market, then there is a lot of money chasing few goods, and the
Correct.
goods are less. The supply of that money, which is demand, is higher. The price
Hmm.
will increase, and the inflation. And no wonder, because of this entire thing, the value of the money is actually falling down because of something called inflation.
Okay.
And this is what cryptocurrency is trying to address. A, there are gatekeepers, there are middlemen who are deciding how much you spend, how much you get, which is your central bank, which is your bank. And it is all these intermediaries who directly, indirectly are kind of whom you trust. And I don't know if you
Hmm.
realize the currency right now, which you have in your hand,
Yeah.
is just if you say 100 rupees, is you are assigning the value of 100 to the trust you have in the system. That's it. Tomorrow, if your
Correct.
trust in the system goes down,
Hmm.
the value of this 100 will also go down. Because if
Got
you
it.
open your currency note, it is mentioned that I
Hmm.
promise to pay the bearer.
Yeah.
I promise to pay the bearer the value of the currency signed by the governor of RBI. So it is the government's responsibility. So tomorrow, if I give 100 rupees to the government is supposed to give me something 100 rupees worth back to me. But that's not
Got
going
it.
to happen, because there's something called as fraction banking reserve system,
Okay.
where let's say, for example, you're investing 100 rupees
Hmm.
in the bank.
Yeah.
The bank will keep us at 10 rupees, but the remaining 90 rupees the bank will lend ahead. And that's
Okay.
everyone, and that's what every bank is doing. So
Correct.
because of this, what is happening is that banks overall do not have enough money with them. So today,
Okay.
if the entire society decides to withdraw the money together, banks will
Hmm.
not have enough money, and they will freeze the accounts.
Okay.
And that has happened for few banks which have kind of gone bankrupt, where
Correct.
the banks end up freezing the account, and there is a huge line out of ATM.
Yeah.
And this is what cryptocurrency is trying to solve.
Okay.
Because it is, A, it cannot be tampered with, B, it is limited in supply, those so it is scarce again, so the
Yeah.
value of cryptocurrency increases. Yes, it is because of the demand and supply of cryptocurrency where there is a volatility. That's a different discussion,
Okay.
because cryptocurrency is viewed as an investment.
Hmm.
But if you look at cryptocurrency as just a currency, then the value of that currency could be increasing, because A, it is scarce in nature.
Yeah.
And more people, when they join this network of blockchain, there will be more adoption of these cryptocurrencies, and it
Correct.
will strengthen the cryptocurrency and its requirement more and more. Why? Because A, it is transparent. B, you
Yes.
cannot be just printing anyone. C, it is your own money. You are your own bank. As far as
Correct.
you have the hash code with you, and it
Hmm.
is only with you, it is there's something called as a private key and a public key. So that
Yeah.
private key is the key to open your vault and see how much Bitcoin or how much cryptocurrency you have. And it
Correct.
is only you who has this number. Nobody else in the world have it. So if you want, memorize it, and it's right there in your brain. You don't have to write it anywhere. And the problem is, because it is only you who have that number, and
Yeah.
if you forget that number, you also cannot open the wallet.
Okay.
But nonetheless, this is how strong the network is. Now,
Correct.
when I'm talking about all these things, you would get a sense that yes, I am saying that I am pro cryptocurrencies. Uh,
Okay.
this is my opinion about it. The future of cryptocurrency, it is so revolutionary idea where we have been so used to fiat currency and we have
Yeah.
been so used to trusting that currency. It is going to take a huge amount of time for the mankind to maybe adopt it, and there's a possibility of adoption, but
Yeah.
again, there are a lot of resistance to it because the central governments would never want this situation to happen where the cryptocurrency, where the individual himself is the bank. He doesn't need anybody else's approval. Like today, if you
Correct.
have to transfer the money to, let's say, for example, in USA, you have to go through a banking channel and you need bank's approval. But if with cryptocurrency, as far as the opposite person is also on the same network, the
Yeah.
same multiverse, parallel world, you can easily transfer with no questions asked.
Correct.
And over here, there are you can open the cryptocurrency. And so, how do you invest? There's something called crypto wallet, and you
Yeah.
can take that crypto wallet. If you're going via someone, then you have to do KYC. But if you
Okay.
kind of directly go for it, like you have to convert your currency into US tether, and then that's a stable coin, and then US tether, you can through that you can buy a cryptocurrency. In that approach, you don't even need to do a KYC.
Okay.
So from that perspective, the adoption of cryptocurrency might increase, but again, there could be a requirement of regulation because unfortunately, we as humans, we have so much of energy.
Yeah.
We need some amount of rules and regulations to channelize energy, and that's why we have rules and regulations in places we go, right from education
Correct.
institutions to hospitals to polices. So my opinion that it would take good amount of time, maybe not century, but definitely few decades for
Yeah.
cryptocurrency to gain popularity and adoption. And talking about adoption, one last data point.
Yeah.
You'd be surprised to know, as on 2024, Indian citizens are at the top of the list
Yeah.
in terms of usage of cryptocurrency. Cryptocurrency is unofficial in India because RBI has not recognized it,
Yes.
but it is not illegal as well.
Correct.
So Indians are on the top of it. So when you said that most of the people are investing in cryptocurrency, you are right, and here's
Yes.
the data.
Got it.